Learn it and love it, y'all.
The fair tax can probably best be described as a tax replacement plan. We're going to take the federal income tax in all its forms. That includes the corporate income tax, the personal income tax, the payroll tax, gift and estate taxes, all federal income-based taxes, and we're going to replace all those with one single tax called the fair tax. The fair tax is a consumption tax. That means instead of taxing income, what we earn, it's going to tax what we spend. We're very familiar with those. We pay sales taxes, and this is going to be a form of a national sales tax. I say form of a national sales tax because there are different ways to enact a national sales tax. So the fair tax is a specific kind of national retail sales tax. It's different than other sales taxes for a couple of reasons. First of all, it has no exemptions, exclusions, deductions. It's a pure sales tax. We've designed it so that it raises the same amount of money under the fair tax as is raised today under the income tax. We call that revenue neutral. So the same amount of money is going to be collected by the federal government that's collected today. We also want to make sure that the fair tax is not regressive. Regressivity is a phrase that talks about people at the lower income levels being taxed too highly, and some people think that sales taxes are regressive, and they can be. But you can fix that, and the fair tax has fixed that. The way it did this is through a prebate system, and that means that every American will get the amount of tax, sales tax, that they will pay on essential goods and services in advance of having to spend that money. So that makes the sales tax, the fair tax, progressive, which means the more you spend, the more you're going to pay in tax. And lastly, I need to emphasize that the reason why we would do this, besides the obvious reasons of simplicity, the federal income tax is terribly complex and burdensome and intrusive, the main reason to do this is because the fair tax is pro-growth. It is going to give a huge boost to our economy. It's going to create jobs and economic opportunity for America. It's by far the best way to collect taxes. So we are strongly in favor of a tax system that's fair, that's transparent, that's simple and non-intrusive, and the fair tax meets those criteria. "45 states today, in fact, already collect sales taxes. Two of the biggest economies in the world, the states of Texas and Florida, have sales taxes primarily as their tax collection mechanism. So the great thing about the fair tax is that we can do away with the IRS. We don't have to have a national tax collection agency. We'll let the retailers collect the sales tax just like they do today. It'll be another line item on their tax collection. They're actually paid a fee to do that, so there's no burden on the retailer. They send that money to the state. The state gets a fee also for collecting that, and they send that on to the United States Treasury. So there is a very good tax collection system in place, and think about the advantages of never having to file a tax return, a personal tax return again, but simply paying your tax as you go about your business purchasing goods and services. Yes, the fair tax plan repeals the income tax, and we would like to go a step further, and we would like to repeal the 16th Amendment constitutionally. And what this will do will be a guarantee, an ironclad guarantee, that we'll never have a sales tax and an income tax. So the fair tax itself is simply going to replace the income tax by statute, and we just like to go that additional step and say, let's make sure that income taxes, or any tax on income, is now unconstitutional. Although people believe that we'll be bringing services into the tax system maybe for the first time, these businesses are taxed today. They're just taxed in a different way. They're paying income taxes, they're paying payroll taxes, they're paying compliance costs. So there's a tax burden in all those businesses today, and of course all those burdens are borne by the customer in the end. So businesses are just legal fictions. There are people always at the end of the tax-paying system, and it's generally the consumer at the end of it. So these businesses are now going to be taxed. They're just taxed in a different way. They're taxed with a sales tax. They're going to collect the sales tax rather than being taxed like they are today with a corporate tax and payroll tax. primarily by simplicity. I mean, the great thing about the fair tax is everybody's taxed at one rate and there's no exemptions or exclusions. Therefore, if somebody wants to change the rate, it has to be changed on all of us, so all of us can get together and object to that, as opposed to the divide and conquer, and we say, well, we're just going to raise the rate on this group of people or this group of people. And the same thing with exemptions and exclusions. The first one that comes up is going to be very visible to everyone, unlike today when they can hide exemptions, exclusions, and deductions in a very complex tax code. It's just going to be obvious. So transparency is really our best protection against having this tax system eroded into something we don't like. It is a 23% sales tax. Some people say it's really a 30% sales tax. Yes, it is. It's also a 30% tax. Well, how can it be both? Well, how can a football field be 100 yards and 300 feet? Because it's a different way to measure it. You can measure sales taxes in a tax-inclusive rate, yards, or tax-exclusive rate, feet. And the difference is, if I go to the store and I spend $1 under a fair tax world, 23 cents of that is going to be tax. It's 23% of the dollar. If I go to the store and I have an item that's $1, they're going to multiply it by 0.3, 30%, and I'm going to pay $1.30. 30 cents of $1.30 is 23%. It's just a different way to count the number. Why did we use 23%, not 30%? Because we're going to replace an income tax, which is measured in the yards version or the tax inclusive. So I want to compare a sales tax rate under the fair tax with an income tax in the same way of talking about the numbers. So that's why we typically use 23. If you want to compare it to a sales tax rate, typically tax exclusive, we use the 30% rate. So both are correct, and there's no effort to be confusing. We're actually trying to be fair to compare the rate the right way. Consumption is actually a more reliable source of revenue than income. Our current tax system obviously is based on income, and so fluctuations in income will change the amount of money that the federal government is able to collect. Consumption over time, if you look at it historically, is actually more consistent than income. So basing a tax on consumption, if one is worried about consistency and the government being able to fund itself on an ongoing basis, is actually a better one to use. Well, during the transition between an income tax and the fair tax, the average taxpayer will just experience a far simpler world. They will no longer have to keep all their income tax records. They'll no longer have to worry about April 15th and filing an income tax form. They will see tremendous economic benefits surrounding them. They'll see interest rates coming down. They'll see the prices of their products, even with the fair tax included, not be inflationary. And they'll see much more economic opportunity all around them. On a personal basis, they'll just be relieved from the burdens that we have in our current income tax system. There's very little transition needed on the part of an individual other than enjoying the benefits. That's one of the great things about the fair tax. Under the fair tax, used goods are not subject to the national sales tax. And the reason why they're not is that that would be double taxation. Imagine you bought a new car and you paid the sales tax or the fair tax on your new car, and you turned around and sold it the next day. Well, you've already paid the tax for that car. So now that tax is embedded in the price of that car. And if you sell that car for a little less than you bought it the day before, you're going to recoup that tax back to you, the person who paid it. So the person who buys the used product is not going to pay the government another round of tax on that car. They're going to pay you, and you're going to recoup the tax you paid. So not taxing used goods is a way to prevent double taxation, which in the fair tax, we never want to double or triple tax any money.